In today's video, I'm going to be discussing how I got a tax return of $2,048 from the last financial year from 2022 to 2023. I'm also going to be showcasing how much money I made during that year as well, and also some other metrics that I think are pretty entertaining and fun to talk about. And I've decided to make this video today because this time a few years ago, I didn't have a very good understanding of all the stuff and how it all worked. And I also noticed a few times recently, because it's kind of the season of taxes and getting tax returns, that a lot of people in my kind of circle or my community don't really understand it. For example, I was at a small party the other night and I heard like a lot of people discussing like their tax returns, how much they were getting in return, and also how much they were having to pay and all this kind of stuff. And in that commotion, a lot of people just had no idea how it all worked. And also literally today, I served two ladies at my new job, and they didn't understand it either. They were just talking amongst themselves, thinking they would get some sort of return and all this kind of stuff, and how they got returns in previous years and all that. So that's why I kind of want to make this video as well. And in actual fact, this $2,048 that I've received from the IRD is actually a bad thing, to be honest. And I'll go into detail in this video about why it's technically like a bad thing, especially from my point of view, I guess, but we'll get into all that stuff later on in this video. Now, in order for me to make sure that everybody has an understanding of how I got this, $2,048 tax return, I have to briefly explain how taxes work, and I will just get you up to date just in case you have no understanding. So in New Zealand, we have this kind of tax system. So I'll leave maybe the tax brackets on the screen. I'll give an example of somebody that earns $48,000 per year. There's a misconception that if you earn, say, within some threshold, that you'll pay that amount of tax. So for example, if you were to earn $48,000 per year, it's probably assumed that you'll pay like a 17.5% fixed rate on the income that you make, but that's not how it works. How it actually works is you'll be taxed at 10.5% on the first $14,000 that you make, and then the following $34,000 to get up to that, $48,000, will be taxed at a rate of 17.5%. And alternatively, if you were, say, making a $60,000 income, the whole concept would be the exact same. The first $14,000 of the $60,000 you earn will be paid at a 10.5% rate. Then the next $34,000 up to that $48,000 cap will be paid at a rate of 17.5%. And then the remaining $12,000 will be paid at a rate of 30%. I know that's a very simplistic overview, but hopefully now you kind of have some sort of understanding. So let's break it down and actually give you my personal situation so you can kind of get an understanding of how, everything worked for me and how I actually got this $2,048 tax return. So I'll share with you my last financial year. So this runs from the 1st of April to the 31st of March. And this is the period or duration where like your kind of like taxable income is calculated. So it's not like from the 1st of January to the 31st of December. It's kind of weird. I actually don't understand the explanation for why it's during that period, but that's just pretty much how it is. So from the period from the 1st of April 2022 to the 31st of March 2023, I made an income of about $40,000 during that time frame, pretty much solely just from self-employed income. So that was doing things like Uber Eats and DoorDash, and maybe making videos and earning money through affiliate income. It's not a really like gargantuan amount of money. I totally understand that. I think if you break it down like per week, it's somewhere probably within like $600 to $800 a week off the top of my head. So it's not a whole lot of money. So regardless of everything, so let's just break it down. So if I earned a income of $40,000 within that period, this is kind of what my tax situation would look like. So for the first $14,000 that I earn of this $40,000 income, I've got to pay at a rate of 10.5%. And then the following $26,000, I've got to pay at a rate of 17.5%. So that means the total amount of tax that I would need to pay to the IRD during this financial year would be this amount. I'll leave it on the screen. But my situation is a little bit different because I'm self-employed. And as somebody that is self-employed, there are some tax benefits that I can receive as somebody that is self-employed. And these benefits are basically just claiming back business-related expenses. So last financial year, I had about $8,000 worth of claimable business expenses related to my business, which means that rather than paying $40,000 worth of taxes, I basically just had to pay like $32,000 worth of taxes. So I'll leave a screenshot here of basically just like my taxable income that I needed to pay tax on last financial year, which was $32,235. So for this example, I needed to pay the IRD $3,646 for this financial year. And the reason why I was able to get $2,048 is because of this. So I have been using a software to kind of manage and handle my taxes and pay my taxes as I've earned money from the last financial year and also the year prior. And the service I've been using is called Henry. So basically what Henry has been doing every single time I get paid is they'll deduct the income tax that they think I'm probably going to be paying to the IRD, so I don't have a big bill to pay at the end of the financial year. So what had happened was I hadn't been updating my business expenses throughout the year, so Henry were actually deducting probably a little bit too much from my pay relative to my income, which had meant that throughout the financial year, I'd actually paid $5,995 to the IRD for this financial year. So basically what had happened was I paid $2,048 to the IRD that I didn't need to. And now what they've done is they've just reimbursed that money into my account that I was always entitled to. So pretty much the summary for this video is basically if you're getting some sort of return, it's because you paid too much tax relative to your income from the financial year or the financial year prior. And if you have a bill to pay, it's because you haven't paid enough tax relative to your income. So for example, for me, I had to pay $3,946 to the IRD for this financial year. If I had been using Henry and Henry had only deducted $3,000 from my account going towards income tax, then I'd have a bill to pay of like $946 or something like that. And you might be in a situation where you're employed, like myself right now. I've recently got a regular job, but there could be a circumstance where your employer is paying too much tax for you relative to your income, or also alternatively not paying enough tax for you relative to your income. So in either circumstance, you might have a bill to pay at the end of the financial year, or you'll get a return like I did this financial year because I paid too much tax basically. So hopefully that answers a few questions, and I think that is the most simplistic way of explaining this whole procedure. Basically, I know it can be a bit complex and overwhelming, but that's just basically the way that I'd explain it to myself like 2 or 3 years ago. So yeah, if you liked today's video, by the way, please let me know. I kind of enjoy making these kind of videos and just helping people out because I feel like on YouTube there isn't really many videos related to this stuff, and I would have, again, just really appreciated it. And if you did get some value out of this video, you might also enjoy some of these other videos on the screen where I try to provide some value as well.